Welcome to the Measure Success podcast, where we talk with top leaders about effective strategies that inspire success. Very excited to record this episode. We've got our Navy swag on here. If anybody's watching, go Navy, of course, beat Army. This is fresh, recorded after 1 week after the U.S. Naval Academy beat Army. Yes, by the time you release this, it might be a little bit since you heard that. Jody Grunden, who is our guest today, what he is excited about is Indiana in the college playoff, and they're playing Notre Dame, correct?
They've already beat Notre Dame at this point.
Yes. By this point, Indiana is probably the national champion. So
I'm thinking so. Yeah, I'm thinking so.
and the other part around this, which is kind of funny, is and forgive me here for the Duck fans. So I actually grew up a Duck fan. Okay. But I went to then the University of Washington, and then you instantly can't become a Duck fan because they don't like each other, right? And I didn't know that. I was a young kid, and so the O that you may be aware of that they stand for probably also refers to 0 national championships. And so the risk we have here is they might actually get one this year because they're the number one team heading.
They are very good. They're very good.
And they're very good. And they have a legitimate shot to win. So there's 11 teams left at the moment of this recording who still can stop them from winning the first national championship because they have about 4,576,223 uniform combinations, but still 0 national championships. And so we were, and it's good. And I hope this is a funny podcast and people could look back and laugh. As I said, I have a lot of great friends, including family, that are Duck fans. So good luck for you all. And we'll go from there. But we are more excited about Navy because they just won. But of course, we have our guest, Jody Grunden. He's the Summit CFO, as noted there. He is why I brought him on. He was with us with the $4 Million Strategy podcast, but he's just not your ordinary quote unquote CPA, for lack of a better term. You know, he goes way beyond that. He's an entrepreneur. He has built a business. He has helped sold his business. He continues to grow his business of what he's doing. And so, Jody, welcome so much to the Measure Success podcast today.
Yeah, thanks, Carl. This is going to be great.
So, yeah, we chatted way too much, and we will not go into our content we talked beforehand because we might be barred from all airwaves of all parts. So we won't go into that today. But for those who aren't familiar with your business and what you do, why don't you give a 1-2 minute spiel on what you do?
Yeah, sure. So we created the concept Virtual CFO, and what that means is that we actually work alongside the business owner and help through strategy. We help them get through their pipeline, through their forecasting, through all their KPIs. We can do the back office stuff, which a lot of folks out there, when you hear Virtual CFO or CFO service, is mostly the bookkeeping, accounting, controller stuff. We can do that. About a third of our clients do it, but we created the concept to add a bolt on top of that really kind of helps the business owner grow. And we've been doing it for 20 plus years. Created a subscription-based billing model. We've been doing it remotely for over 10 years. And it's been a wild success. Grew to about $12 million, or actually about $10 million before we merged with a large accounting firm. Now we've added another $250,000 or $2.5 million added to it now. So we're at 12.5 and growing towards 20 million within the next 2 or 3 years. And so we're on a good pace and loving life.
That's outstanding. So, of course, I have my own experiences of why this is a valued experience, being a CPA myself. But I'm curious for you and what you've seen and observed is why is this growing so much, and what value to provide to that entrepreneur or that business owner who doesn't have one yet?
Mm-hmm. Yeah, it's a great question because when we first started it, back, like I said, 20 years ago, we got this flat growth. I mean, literally flat growth. We'd pick up maybe 1 to 4 clients a year. And we're like, I don't know if this is going to be as successful as we were hoping. And so we had the other stuff that we were doing, other accounting stuff. And once we started really getting the word out and digital marketing came around, the website started coming around, more people are kind of getting an idea of what it was and how to do it. We went and then talked at CPA conferences and really talked about it. Even the CPA firms really weren't taking advantage of the opportunity. And what the big benefit for the customer is that when I worked at a large manufacturing company, $250 million manufacturing company, we had a lot of me's. a lot of me's were in here doing, helping this manufacturing company grow. It was like when I started Summit, be honest with you, I didn't like accounting. I wasn't very, I was good at it, but didn't enjoy doing it. It wasn't exciting for me. When I became that entrepreneur and trying to figure out a way to provide a level of service to people, that was exciting. And when clients saw that, hey, what we could do is not only show you the past stuff, hey, here's your financial statements that they really didn't understand anyways, but hey, here's what this means going forward. That's when people are like, wow, this is pretty cool. And so we started providing it to really small companies. And I would say small, $500,000 to $1 million. And then eventually it became 1 million and above and so forth. People are like, this is a service that really excites me because it really helps me do what I'm doing best, working in my business, and I can give the financial arm to somebody and know that, hey, it's being handled and done correctly. And that's the big benefit, I think. And so for those that are looking for that type of service, make sure when you look for that service, you're looking not just for the accounting side, but the strategic side on top of it to really help grow. And that's why it's becoming such a in high demand. I'm part of a client advisory board for the whole AICPA, which is a governing body for accounting firms, and they've seen over 17% growth on average for for firms that are providing this level of service. And so it's a really high demand, high touch service to help entrepreneurs, really grow their business to whatever their end goal is. Sell the business in 3 years, grow it to 10 million bucks, whatever that might be. That financial advisor or financial CFO or whatever you want to call that person is there to really kind of guide the ship.
And there's more to it. Yeah, I
I
love it what you said there. There's more to it than that, right? There's, your people typically can't afford a small company, can't afford a true CFO.
Right.
Because I want to say this out of absolute respect to people who are CFOs out there and have different titles, right? But somebody who's been in industry for years, right? There's a difference between a CFO of a $2 million company, like meaning within it,
Yep.
right? Versus a CFO of a publicly traded company.
Exactly.
Right. And for most small companies, we're not looking for the Fortune 500 CFO because we don't need it, because they're doing things that you don't have to deal with SEC compliance. You don't have to deal with investor relations, as you're a really big company. A small company, most small companies don't have to deal with that. But to understand your business properly, you have to understand the language of business, which is accounting. Mm-hmm. And most entrepreneurs don't have that background. And the beauty is you can hire a virtual CFO typically for a fraction of the cost. And that's such a huge part of the value. So, forgive I'm not looking for numbers, so to speak, but like in terms of like percentages, let's say, for example, somebody has to, I'm just going to keep this simplified here. Let's say they have to pay $200,000 for a CFO as an example, right?
Yep.
And this is what I call not even a Fortune 500 CFO. I'm talking
because you're not going to find one for $200,000.
That's right. Right. I'm talking a $30 million company.
Mm-hmm.
Just paying $200,000 for a CFO. Mm-hmm. But and of course, a small company who's $1 million to $5 million can't even consider that cost, right? Because it's way too expensive. And if they do, honestly, they go out of business often, right? It's the wrong decision. So in terms of like a fraction of the cost, how much fraction of a cost is it to use a virtual CFO versus hiring a full-time CFO?
That's a great question. So it really depends on the need of the company. So if the company has an accounting person on staff that's doing the bookkeeping side, then a fractional CFO on top of that's maybe going to be about $40,000, $50,000 additional per year. If they need that person to do the accounting, then you're probably talking $70,000 and above. And with that, our average client we bring on is about $75,000. So that gives you kind of an idea. And our typical starting point is about $1.5 million, and our average client's probably $5 million in revenue, and we get as high as $30 million. So the higher, the more that they are in revenue is typically an indication of the more that the service is really going to cost, because there's more needs. Now they get an advisory board. They've got all these extra stuff that the CFO is actually doing, whereas a $1 million company doesn't have that. And so it should, when you're pricing this type of service, it should scale based on size of the company, whether that's in people or dollars or whatever is the big indicator that, for growth that company, it should scale based on that. And I'd say you're going to run probably between $50,000 to $100,000 is a typical engagement, bringing in a CFO.
Yep. Yep. And that's, once again, it's a good data point. I just want people, once again, to understand and know what those numbers are, right? Because there's ways to do it legitimately. And what let's again, using that simple example of a $250,000 CFO, what you're basically saying is for 25 to 50% of the cost, right? You could bring somebody in. And this is another thing that people don't want to hear in the accounting world, but often it's cyclical, even month to month, right? There's a series of transactions. You want to make sure you get monthly financials. You want to see quarterlies. You want to see where the trends are. But the reality is it's not every single day, right? In terms of things happening, unless you're managing a bunch of people, and then there's still cyclicality to it. So I can make this argument that we, in a weird way, should almost always be having virtual type people, because what we tend to do is we fill it with stuff that doesn't matter. There's a lot of waste in the accounting world, and I'm a bean counter by trade, right? And it's kind of crazy, but of course we just kind of got used to it that you have to, right, do these things, and that's the way it is. Okay, so how in the heck did you get into this business? What you mentioned kind of the beginning of your days of like, hey, I had this different background and I got into this. Like, what prompted you to start your company?
It's kind of failing forward, right? And so when we started it, I wanted to do something differently because I worked in the public accounting world and hated it. It was just like from January through April, it was our busy time of the year, super compressed time. You're working 70, 80 hours a week. You're not seeing anybody. You're getting up, going back to work. It's just a rat race type of thing. It was something that was like, man, I got physically sick in December just thinking of what, was going to happen. It's like, I can't do this for very long. And so I thought, well, maybe it's the accounting firms. I changed a different accounting firm. And then I ended up getting fired from that accounting firm and said, hey, you just don't have the personality that we're looking for. And I'm like, and you'll never be successful in accounting. I'm like, well, that's nice. 20-year-old talk, the managing partner comes down and says you'll never be successful in accounting. I was like, okay.
Wow, you actually got told that.
Yeah, I was told that. Yeah. And so I thought, well, I'm going to go work in the corporate world and see if that works. And so I worked for this $250 million well, ironically, that same accounting firm tried to buy us out when we hit that $10 million mark. Yeah, the partners humbly sat around, and I know we didn't end up on good terms, but we've changed. It's way too ironic and super funny. But getting back there, I worked in the corporate world, and I thought this has got to be my cup of tea because they obviously said public accounting wasn't for me. It was a lot slower, which was a nice part about it, but that was also the bad part about it. For me, it was too slow. It was like Groundhog Day. Same thing every day, doing the same thing. And I took a 50-hour work week. The person was working before me, he worked 50 hours a week. I took that to like 20 to 25 hours a week because I automated everything, brought everything to where, it basically made it easier for me. But then it was like, this is, now what do? I don't want to do anything else. I didn't want to raise my hand and tell them, hey, can I do payables or receivables? I loved what I was doing, which was the treasury management, the tax stuff. That was fun, but I didn't want to make it bigger. And so when they were going through some layoffs, I was part of that layoff committee, and it was like pretty brutal. If you've ever been part of one of those, pretty brutal.
Oh yeah.
You're eating lunch with people that you're going to let go. It's like, wow. Then you have to put a straight face on and just not tell anybody. And that got to me pretty big time. I was like, this isn't right. Here I'm trying to look for work and I'm letting people go. And so I talked to the CFO at the time and said, hey, I'm thinking about joining this other firm, starting a company up. How are you okay with that? And it was like, gosh, no, we don't want you to do that. But if you do that, we want you to be our first client and actually do our taxes, which at that time was like a $35,000 tax return. Now I can't imagine what it is, but I'm like, yeah, that'd be great. And so I worked for this other firm, brought them on as my first client, realized pretty quickly that it wasn't the public accounting firm I didn't like, and it wasn't the corporate world I didn't like. I just didn't like having a boss. Yeah. And with that, I was like, I got to do this myself. And so I started my own firm within a year after that, and brought that client with me, and I was able to hire my My now partner, business partner, Adam Hale, was my first hire out of college. Best hire ever. It's one of those things that, you get lucky. I got super lucky. Hired the person that was going to help us get to that, $10 million mark. And the first day I was like, hey, I'm going to change the way people think about accounting, period. And I'm not going to bill by the hour. And I ended up billing by the hour for the first couple of years, getting how to do it. I'm going to provide them a service that they're going to really enjoy having. They're not going to make fun of me because I'm going to wear different. I'm going to dress to how they dress. I'm not going to be in a suit and tie, and all these different goals that I had. And like I said, the first day, it's like, okay, how am I going to build this thing? And I only knew by the hour, so I started billing by the hour. Exactly the opposite of what I wanted to do. And then what happened is that I couldn't afford to be the bank because I bootstrapped the entire company. And so it was one of those things that I couldn't come to these meetings with people and hey, you need to pay your bill. And then they didn't show up for meetings. And I was like, oh, how am I going to figure this out? And so I had to figure out a way that to provide a service on a regular basis that they would like to come to, that was beneficial for them, and that hey, the hourly bill wasn't going to be a factor that determined it. And that's when I came up with subscription-based billing. At that time it was, hey, let's bill every week or every month, just hit their bank account on a monthly basis. We were meeting with clients on a monthly basis. We never even thought about weekly. That was kind of a weird, why would you do weekly? And so we're meeting with them monthly, and we're providing forecasting to them. So we're providing cash flow. And here's what's going to happen over the next 13 weeks. Then we thought, then they asked, well, hey, I like to see it longer. Can you take it 3 years? I'm like, well, yeah, we could do that. And so here's what's going to happen over the next 3 years. And we kind of broke it down into things that they could understand, not just simply, hey, we're going to increase your revenue by 10%. Nobody understands how to do that. But it's like, hey, here's how many more widgets you got to produce in order to get that. Can you do that? And it's like, no, we can't do that. Well, okay, then we need to lower the dollar amount. Or yeah, we can definitely do that. Then we increase the dollar amount. And okay, here's what your cash is going to look like in December and January. And they're like, wow, that's pretty cool. What if we did this? What if we increased the price a little bit? What if we brought on more people? And it's like, then it became super dynamic. And it was like, they couldn't wait to be at the meetings. It was like every month they're like, hey, let's meet, let's go through that. They're there, they're bringing their partner with them. We're modeling things right in front of them. And they're seeing, wow, all the magic happening down the road. And they're seeing we can achieve our goals. It was amazing that once we actually created that forecast for people, the folks that were kind of going flat all along, just kind of, wondering why they're not growing or wondering why their bottom line shrinking, those folks are actually now growing significantly. And I can remember one of our clients, they maybe had, they were borrowing on line of credit all the time, 100% borrowed all the time. They might as well have been a loan. Never had any cash in the bank, and they maybe had $300,000 in revenue, maybe. You're looking 10 years later, they're now like $5 million in revenue. They've got plenty of cash in the bank. We're talking at least 10% of the revenue and no line of credit. And they were able to sell it, hand it down to their next generation, their kids. And their kids are doing really well because their kids grew up in the business with that mentality versus, hey, we have to leverage everything. We have to spend everything last minute to save on taxes, whatever. And it was just such a fulfilling type of, of an engagement that we have with clients. Really enjoyed it because it was like, wow, I was just taking what I learned in accounting, something I didn't really enjoy doing, but helping somebody else really and see the success they received. And that's why we did it, and it kind of sucks in a way because a lot of times, we'll get a client, we'll take them to the finish line. They've gotten to where they want to be. They've grown it to 5 million, whatever. They're selling it. They're merging. They're doing whatever. And then we lose them as a client. And it's like, well, that's the coolest thing ever, right? But it kind of sucks because you're losing a client, but in the same point, you're gaining a friend forever. And that's why we went in business, and that's why we do what we do. Just because we want to see other entrepreneurs be successful.
I really appreciated what you talked about there. And like earlier, I mentioned this concept of the language of business.
Mm-hmm.
And this is what people who don't have the background is when you can get into scenario planning. And when you can help them understand, look, it is a formula. Everything is a formula from one perspective. Like, there's, if you hire a person, that has an impact on your expenses, but it could also have a positive impact on your revenue. It could have a positive impact on your throughput, your ability to be able to get things through the. I love that concept you said, because that you said something so huge. There's so many small companies and even larger companies that are foot and mouth. I mean, like they are struggling in cash crunch situations annually. And even a lot of times this is like one of biggest misunknowns is that most entrepreneurs make below what they could make in the market if they sold, if they were working for a larger company. I mean, but they have the passion like you is like, hey, I can work for somebody else. I need to work for myself. But the sacrifice is unnecessary. They don't know it's unnecessary because they don't understand the numbers of business. And and next thing they know, they're paying. I mean, I kind of joke sometimes. I literally told somebody that is like, and of course, there's like was they didn't want to hear this, but it's like you realize you can make more being a manager at a Taco Bell right now,
Right. Right.
right?
Mm-hmm.
And of course, that's the last thing they'd ever envision themselves being in. But it's not okay that you're not making market wages. And so, how do we change this business so you're actually making a fair wage? So you're
Exactly.
not the lowest paid employee in the company,
Mm-hmm.
right?
Exactly.
This is not uncommon. I mean, how many times, Jody, have you seen it
Oh,
where like they're
tons.
just literally taking the scraps that's left at year end,
Mm-hmm.
and then of course the worst part, they go, oh, I don't want to pay any taxes, but they're not paying themselves even any revenue,
No,
any
I know.
earnings.
I know. It's
And
it's
so,
brutal. We
yeah,
tell a client, if you're not making at least $150,000 a year, you've got a job. You don't have a business. You need to go find a job because there's too much risk involved. And think of all the employees that are at risk because you're not making enough money. When you think about that, it's like, so it's your stewardship to make sure that you're at least making that amount of money and more, but also having that profit, that bottom line. Because like you'd mentioned, a lot of them are like chasing their cash. You're like, hey, I need revenue to pay this bill. When's this next invoice coming in? And they think it's a cash issue, and it's not a cash issue. It's a profit issue. It's like,
that's right.
I'm not bringing enough profit in the bottom line to be able to support what I've got there. Or if it's not a profit issue, it's like I'm taking so much out of the all this cash out every time I get it, me, the owner, that you kill the company because you're pulling
That's
it out
right.
the bottom end. And so you really need to have that person that's going to level with you. That's not just going to be that agreeable person to come in and say, hey, here's where you're at. Here's where you need to go. If you want to get here, here's what you got to do. Are you willing to do that? Yes or no? No. Well, then I'm probably not the right fit for you. If you are, then hey, let's take that journey together. And I think that's where you're going with on that.
Yeah, I'm kind of curious for you when you're guiding a company for the first time, and you're like, you should have X amount of cash in the bank. What is that? What is that kind of minimum number you try to tell a company that you really should have X amount at all times?
Yeah. So if it's a service-based company, we say 10% of your revenue. So annualized revenue, if you're $1 million, you need 100 grand in the bank. And 100 grand in the bank just handles cash flow. It doesn't give you any extra stuff. That just handles money coming in, money going out, receivables, payables, the timing and everything. And that gets to a point where you're not looking in the mailbox for the next check. It's like, oh shoot, I can't pay my people. So that 10% is the key. Now, if you're less risk averse, then up to 30%, which is 6 months. And so you've probably heard of Dave Ramsey. Dave Ramsey always says 6 months for an individual. It goes really the same way for a business. You want to have a lot of cash. Now that doesn't mean it's just sitting in your bank account doing nothing. It goes into a money market fund. You're making some money on it. It goes into low risk, high interest savings accounts or whatever. But you don't want to be stagnant in there. So we say 10%. Now if it's anything like a manufacturing, then you're kind of looking at your gross profit and you're doing 10% of that. So it's a really similar method. You're just pulling out, you're backing out the hard costs out of there. But it's basically 10%. It's just a real easy. Everybody understands 10% of the revenue. I could go through the formula. There's actually a formula. I'm not going to bore you with that, but there's actually a formula that goes through that kind of proves that out. So I'd say 10 to 15% is the bare minimum that you'd want to have in the bank at all times.
No, I appreciate you bringing up that data point. That's why the number I'll use often with people is like 2 months of minimum 2 months of operating cash. Yeah, exactly. It's the same number, right? And it's like, and why? It's like, well, because, and I'm going to actually go back to something with, here we go. We're not going to go deep. We're just going to shallow here.
Mm-hmm.
Okay, Jody, COVID. Let's go back to COVID for a moment. Okay,
Yep.
Things shut down for basically 6 to 8 weeks. That 10% covers you. If every company would have ran with 10%, they wouldn't have ever needed a PPP loan.
That's right.
Not every company, right? I'm not saying there's a few companies like the restaurants out there, and there were some companies that had extreme, but the vast majority of business, that 8 weeks or that 10, once again, 10% of revenue can literally get you through almost any major recession.
Yep.
And that's the real why behind the why,
Mhm.
in my opinion. It's like
100% agree.
we shouldn't. And by the way, folks, don't expect another PPP loan in the future. I don't think that's happening again. I think it's a big reason why companies are struggling right now, where costs have gone up, they haven't raised their prices enough, and they haven't put in the right cash in, and they almost seem like they're waiting for the next like stimulus, whether it be lower interest rates or something that's happening. And we
Mhm.
just recent recording, the Fed just
Mhm.
said, right, folks, we're not raising interest rates too much, right? And so there's meaning you have to win the old fashioned way.
Yep.
You actually have to run your
Mhm.
business well. There's no free lunch right now.
Yeah.
And so right now, as you're like looking into these things right now, and we just got a few more minutes left here, Jody. What are some what I call the business management piece that you're really trying to help companies out right now with seeing how to run their company better and not just going up and down with the tide, but literally being better than their competitor.
Yeah, I mean, you hit it on the nose that that with the PPP loans, that kind of masked the issue for a lot of companies. A lot of companies were not running their business in a very good way, and that PPP loan just like, oh, I'm fine, I got money in the bank now. It's like, well, yeah, the government gave it to you. That's why. Otherwise, you would have been out. And with our clients, our average clients keeps about 15% of their cash in the bank, and so they even did better. So with the conversations we had with those clients during that really bad time was a very slow, methodic, hey, here's what we've got going on. We're thinking about this client might leave. They had time to react. And the ones that didn't have that cash in the bank reacted just like this because they didn't have time. And so that time, that cash bought them time to make really solid, informed decisions that some folks just didn't have that ability. So you're 100% right there. And so the very first thing that we do is when we hop into a client, we're looking, hey, how can we, well, first of all, figure out what their long-term goal is, right? Is your goal to grow it to $1 bazillion in a short period of time? What is your really goal? And so once we know what that goal is, then it's like the next thing we look at is cash. How can we get that 10%? Because most companies coming to us do not have 10% in the bank. They maybe have 4 or 3, or maybe they're negative because they're borrowing on their line of credit and they don't have the cash. So ours is, hey, how can we actually get them in a position where we're not talking cash all the time? Because we don't want to talk cash all the time. We want to talk about growth. All the different things they can do. And so with the idea is, hey, how quickly can we get their cash position into that positive ring? Is it going to be a year? Is it going to be 6 months? Is it going to be a year and a half? Everybody's a little different based on the circumstances. But there's a lot of modeling that goes into that. It's like, hey, do we need to increase prices? Are we employee heavy? Are we employee light? Do we not have enough producers in there? Do we need a marketing person? Is the owner doing all the work in the business and being the bottleneck? Do they need to find somebody to replace parts of their business? There's a lot of questions, a lot of variables that could be the problem or the issue. But the idea is you got to dive in real quick and figure out, hey, what's important? What are the important goals for the actual owner? How quick do those goals need to happen? And then how can we protect that owner over the next year, 2 years with building their cash position so that they can make those informed decisions.
All right, so we're gonna finish up, and this has been great, Jody. And I wish we had more time because there's so much wisdom, right? We can help provide to clients. One of the things ever since I reopened my old CPA firm, one of the things that surprised me is when I started doing strategy, and I very intentionally didn't want to call myself a CPA anymore
Yeah, yeah.
and talk about it because they immediately go, "Can you do my taxes?" It's like, oh,
Uh-huh.
this isn't life isn't just about taxes. It's just one thing.
Right.
But they would look at my background because it's available, and they'd be like, "Oh yeah, one of the reasons we hired you is because you could also be like our CFO for us." It was like this really
Yeah, there
funny,
you go.
experience. It's like, yeah, you have a strategy, but you actually know numbers, right? And
Uh-huh.
that's what doesn't keep us up. That's what keeps us up at night, right? Is do I have enough money in the bank to help pay my payroll, and then never mind pay myself, right? Through that process. So that's fun, but when you're working with your clients, and maybe it's even your company that you have that you
Mhm.
work with. And I know once again you're under a larger firm now,
Yeah,
but
yeah, yeah, sure.
how do you measure success with your clients?
Yeah, so we measure success. We try to find what the KPIs that are kind of driving the success of the business, and so we're always looking at our KPI. Like our KPIs, we're subscription based, 100% subscription based. So we're looking at how many clients are we picking up every month? What's our client churn? And by that, what that means, how many clients do we lose? And the idea is, hey, we only want to lose 6% of our clients, 6 to 10 tops. It is, and then we look and say, hey, on the employee side, what's our employee side churn? Are we retaining our employees? Again, we want to lose employees, maybe 6% a year. And so there's the there's the main ideas or main KPIs that we look at: employees and then clients. And that really kind of dictates, the rest of our company, because we know that if our employee churn is low, our client success rate is high. We're getting good information from there. And if we know that we're bringing it the clients at the pace that we modeled it out, we know that our gross profit's going to be 50%. We know our net profit's going to be 25%. And we know that we're going to have happy clients, because we do surveys all the time, making sure our clients are happy. We do surveys all the time to make sure our employees are happy, because those are the two areas that we actually have control over. We don't have control over the economy. We don't have control over when client, when a client, we don't have a control over those things, and we don't really even care about those things. We care about only things that we can control. And so if we can provide a top level service that our employees love to do, their employees are having fun, enjoying life, and our clients are getting as much out of it, and they're seeing what our promise, then we know that, hey, we've got a successful company. We know the bottom line is going to take care of itself.
So I want to go into a brief. Once again, just got a couple more minutes. One of the things you've done, which is hard, and it appears like you've been doing it successfully, is you've not only were able to sell your business, but you're still now within the business within a business, right?
Right,
That
right,
makes
exactly.
sense, right?
Yep, that's exactly right.
And so, but that can be a really big challenge.
Mm-hmm.
How have you got it to work? What type of things have you been able to do so you're still here, so to speak, right?
Yeah,
You're
sure.
still around, and you
Mm-hmm.
still have growth, and you still have
Yep.
plans to help make a difference.
Yeah, that's a good question. So I'm in my third year of my 5-year contract. We merged 3 years ago. I actually created the deal, and so I created the deal in a way because I knew myself that if I got a lot of money up front, any little hiccup along the way, I'm probably out, because I told you before, I'm not a great employee. And so with that, I was like, I knew that, hey, I got to make it so that, hey, we're gonna create, we're gonna base on 60% of the value on day one, and then we're gonna get paid every month for the next 5 years on that 60%, and then we're gonna reevaluate the company year five. And that's when the other 40% of the value is going to be based at that point. And so the idea was that, hey, if we can grow the company, then I'll get a second bite of the apple year five, and then that would get paid out over 5 years. I was fine with that. And so that was the idea that motivated me, because I knew as an employee, if I'm just getting a paycheck, I'm not going to be the best employee ever. Not because I don't want to be; it's just not in me. And I recognize that from the first two occupations that I had. And so this allowed me to create an incentive for me to still strive to grow the company, grow it profitably. That's important, the profitable part. And with that, then I knew that at that point, hey, if I continue to grow, and who knows, year five, maybe instead of a salary, maybe I negotiate something different that's going to continue motivating me to continue to grow that company. But I know once the salary kicks in, any entrepreneur that's stuck with a salary is going to be disappointed no matter what. And with that, I recognize that myself. And so, with growing the company in the company, it's been fun. It's been challenging. It hasn't been as easy as I thought it was going to be. There's again, you got different cultures, because we're a fully remote company. We've got 55 people all across the United States, and then we're actually international. We had another 15 folks outside of the U.S. And with that, we merged into a company that's based solely out of St. Louis, which again, although they're kind of remote, where they've got people that work outside of the office, they're still in St. Louis, and so they don't have a ton of people outside of St. Louis. They have a few, but not a ton. And so when you kind of mix a remote environment and a brick and mortar environment, it makes it really tough. And so that's been the new thing, the new challenge. How do we mix the two so we have a super great culture? Because the culture of the remote team doesn't have to be the exact same culture as the brick and mortar team. They can, but combined, they should have a really solid culture within themselves. And so that's kind of been been my drive. Hey, how can I create this hybrid environment that people say can't be done, or not done well? How can I keep my division or service line super profitable so it's still growing, and we're still a national brand, not a St. Louis brand? And how can I keep my people to where they really enjoy working within the company. And it's kind of unique that when we merged 3 years ago, we had 55 employees. And I don't know the exact number, but let's say it's 55 employees. Since then, we've lost five. And when you think
Wow, that's
about
it.
it, that's pretty
Wow.
cool. Five of the original 55 employees. And that's I think that's a really contribution to saying, hey, the remote does work. And out of those five employees, I think unfortunately we had to let three of them go. One of them quit and came back, and with that, it's a really positive thing. Now, unfortunately, we lost a lot of folks that were in the St. Louis office that we took because we took over an existing practice because they just didn't understand it was really that was really difficult part was merging the two practices within a practice because there was about 18 folks in St. Louis that fell underneath our division, and then we brought 55 people, and they didn't handle it very well, or they felt the cheese got moved too quickly, and with that, and they bowed out, and we've replaced those folks, and now again we're one big team, and I can say it took us about 2.5 years for us to really go from hey, great growth, great environment, great people, to like, oh no, to back to great growth, great environment, great people. And it was something I wasn't expecting. I thought we could do it a lot quicker. And, but it just didn't happen that way. But now we're back on track, and I can see the growth and see the people enjoyment. We just had employee satisfaction, high scores with that. So there's a lot, but again, there's a lot of little hiccups along the way that's going to continue on, because we pay our people differently. We pay our people a base pay and a variable comps, based on the book of business they have, which so that basically it takes out any kind of discrimination, right? So if you're working on an $800,000 book, you're working on an $800,000 book, you get paid the same amount, which is kind of cool, which is different than paying an hourly and just giving bonuses periodically, subjectively. There's a lot of different nuances there. We have technology stipends that we give our team that the brick and mortar office doesn't have, and because they get their computer and everything provided, they're there. Whereas our team, they feel weird asking for a desk or a chair, and it's like, no, we get a stipend, you can use it for however you want, creating that autonomy. So, like I said, you can have different cultures within a firm, which I think is perfectly okay as long as they both mesh together. And that's the important thing, and that's why we have team retreats. We do it twice a year, bring everybody to St. Louis for one time, so they get a chance to mix and mingle with people that they normally wouldn't mix and mingle with. Then we take them all off site to Vegas 6 months later, and that's when the entire firm has no excuse and they can't go home because they're trapped in Vegas and they're going to hang out with each other and they love it. But those are the cultures and everything that we try to actually combine, and that's what's really kind of made this I would say, a unique way of doing things, a unique challenge for us to get from, fully remote to a hybrid, and then allow me and actually my team to stay motivated during that time frame in order to be successful.
This has been fantastic. One of my final questions I like to ask is, perhaps, is there a book or something like that has really, I don't know how big of a book reader you are or not, but is there a book that you recently read or perhaps read a long time ago that really has inspired you you'd love to share with our audience?
Well, the one that inspired me the most is actually E-Myth Revisited, and that was a book by Michael Gerber. I read that book many times. Well, back then he had a hardback. I don't know if anybody knows what that means. Hardback book, and then it was cassette tape, and all these different things. And when I read it, it's all about processes. It's all about how McDonald's makes it so it's a very similar experience from one place to the next. It's about a hotel that remembers the guest, writes things down, so the next time that guest comes there, they remember the exact coffee that they're drinking. All these different things, and I thought, this would be kind of cool if we could do this in an accounting firm environment. So when I started the company, I'm like, hey, we're going to call this Summit CPA Group, not Jody Grunden CPA, because it's going to be big. We're making this big, even though it was just one person. And with that, it was like, hey, we're going to develop these processes so that Jody isn't doing the accounting, because Jody hates accounting. I told you that already. But Jody's running a business and actually, really kind of developing the business and process so anybody can step inside of it. And when my business partner, when Adam, I hired him out of college, I go, hey, you got to read this book. This is what we're going to do. And he reads the book. He's like, hey, I got a problem with the book. I'm like, what? I thought the book is pretty cool. He goes, that means that you're not going to be working, and I'm going to be working. I'm doing all the work, and you're not going to be doing anything. Like, no. No, together we're going to create this company that is built on process, and that's what we did. So I would highly recommend E-Myth Revisited. Michael Gerber's got many different books out there on different topics. Definitely great reads, very easy reads, very story driven, and highly recommend it to any folks out in the group
No,
that
thank
really do something with their entrepreneurship.
Yeah, no, that it's an excellent. It truly is one of the best books out there. It stood the test of time, and and it really it gets to what you said there. And I would argue that a big reason why your firm grew so successfully is because you weren't in the business. You didn't want to be in the
Right.
business from day one.
That's
You
exactly
know,
right.
it's really hard when you're the doer and you're trying to be the grower. And so I the right thing, it's that classic on the business, in the business, what they talk about, and it really came as one of the big themes that came out of the book. And ultimately, you do that through process and getting great people, but it's process driven, and that's what ultimately, which is the difference between I'm going to do it because nobody else in the world can do it. That's the
That's right.
arrogance, right, of the
100%
individual.
agree. Yep.
And by the way, I run into that myself in certain things that I do in the
We all do.
strategy side versus the accounting side, because oh no, nobody in the world has the experience, which is by definition true, but a lot of people had similar things. And if I actually could figure out how to standardize the way I say things and do things and facilitate things, next thing you know, you have something that's replicatable, right? And it might not be exactly, but who knows, it might actually be better.
Yep. A lot of times it is. A lot of times it is.
Yes.
Mm-hmm.
That's right. That's right. So, Jody, how can people connect and learn more about you and what your company is doing?
Yeah, good question. So, you can always reach out to me through email, Jody, Jody, at summitcpa.net. I picked the .net because I couldn't afford the .com back then. So it's summitcpa.net. Or you can pop me on LinkedIn, Jay Grunden. You can find me there. Or we're on all kinds. You can do a web search. I'm all over the web, YouTubing and all that kind of stuff. So feel free to reach out. I'd be happy to chat with anybody that has any questions.
Perfect. Hey, Jody, thank you so much for being a part of the Measure Success podcast.
It's been great, Carl.
To everyone who's listening, one of the reasons we get great guests like Jody is because of you sharing and giving. What we appreciate is I love the comments that we get when you're listening to the podcast and talk about how these guests are making a difference. So please share, whatever it is on the platform you're listening to. That means the world to me. As we always like to say, wishing you the very best and measuring your success. Have a great day.